Hey there and welcome to yet another episode of Kazi Namali. People asking, Vincent, did you stop going out there and showing us the entrepreneurial skills out there? I say no. Actually, it will be happening pretty soon. But at this moment, we want to take time to give you information and the necessary tips on credit access. And you know, last week we talked about preparations before you go through the door and ask for that credit facility. Now, this time we want to continue with the same conversation, but now talk about credit assessment risk or risk assessment, so to speak. And of course, in studio, I'm joined with the one and only Isaiah Munguti from SMEP Microfinance Bank. Always great to have you, sir. How are you doing at SMEP?
I'm well, thank you. Thank you, Vincent, for having me back.
You know, last time we talked about preparations and we broke down what we could, how a person should bring together his matter before going through the door and seeking that facility. This time you told me you want to look at what happens now when you presented your papers now, what the creditors do to advance that credit facility. And there is these phrases, I don't know if I call them phrases or what, the 5 C's, the Campari rule. We're going to break this down for them to understand.
Sure.
I think we should begin with the 5 C's.
Yes.
What are these 5 C's first?
Thank you, Vincent. I think this is a very valid conversation that we are having. Like you well put it. It is good for the entrepreneur out here to understand what happens behind doors when the application has been put together and then forwarded. And many times it's usually forwarded to the head office. You say the headquarters. The headquarters for review. So many of them cross their fingers and wait to be told whether it went through or not.
And sometimes it's quite a long wait.
Yeah, it's quite a long wait. I can imagine because that is usually the decider. They are waiting to know whether it will be considered or not. So I thought it would be good, like you said, to have this and this kind of conversation, and it's good that you're bringing it up. The technical part. This is actually now the technical part of what many lenders will be doing at the
big terms that you use sometimes to scare us away.
Good. So there are approaches to credit risk assessment or underwriting. One is the 5 C's that you've mentioned, and the second one is called Campari rule. Many of the scoring tools banks will use or lenders will use will be speaking into these parameters that are captioned in these two parameters or in these two approaches. So the 5C it stands for one is character, which we dwelt on even last time. Then there is the aspect of capital. Really look into what the customer or the owner of the business has contributed into the business, and if it's a deal or an application or a purpose we are trying to fund, then what is their stake in it? That balance is usually needed. So that is where the second C comes in on capacity, on capital. Then capacity is the third C, which in essence actually refers to the ability to pay. So you'll find that even when we'll be looking at the other rule, there will be some synchrony in these terminologies. And then conditions. Having reviewed the facility or the request, seeing areas of higher risk, areas of acceptance. So what the lender would be seeking to do is to find out what covenants or conditions do I put in place to safeguard the facility during its lifetime. And finally, definitely, like I said, is collateral, which everyone out there knows. The character and collateral, I think, are the most known. But there is a lot of famous there is a lot that happens in between. But today, I think for our discussion, I think we dwell more on the Campari one, which is the more recent one, and which is being used like in many other by many lenders, so to speak.
When you say recent, what do you mean by that? When did it come into play?
Okay, I may not have the exact timings when it came to play, but what I know is it's credit is a living discipline. We learn on the go, and what we learn in practice is what now we configure to use along the way.
Yeah.
So what the historical or the ancient one was the 5 C's, but along the way, someone came and understood that issues of purpose are important, which may not have come out during the 5 C's assessment. So such things now are the ones that bring in the new acronyms. And so even the Campari is an acronym for parameters that we'll be looking at. Yes.
I think now we should break down the Campari.
Yes.
And this is C-A-M-P-R-I.
A-R-I.
A-R-I, yeah,
Yes.
Campari.
Yes.
It sounds like an Italian name for that matter. Now, the first C stands for...
Still, like I've told you, there is a lot of synchrony within the two terms. So this is also character.
Character.
And one would ask, then what's the big deal about character?
About character.
Character, it rises and falls on character. Character is actually the lender, as I said, gathering a lot of information that can help us to understand who really are we dealing with, without seeing them in person.
Yeah.
Through paper and through stories,
You're able
we want to create a person who we can actually say, this is the kind of person we are dealing with. And so it comes through that character really represents the persona or attributes that would want to see about a borrower. Issues to do with honesty, integrity. The lender is trusting money to someone. So if their character is questionable, so to speak, then the lender would rather keep that money safe in the lockers than give it out.
Yeah.
So character takes preeminence because of its importance.
Yeah.
So what we use then to assess character are many things, and like I put it last time, we would like to look at the credit history of a borrower. Very important. And here we will be looking at past borrowing. We are following behavior. It's actually behavior, not really the size of. There may be issues to do with the size, but really it's a behavior.
The behavior.
What's the behavior of the borrower when they borrow funds? Yes.
Yeah. Did they repay? How long?
Absolutely.
Yeah.
Yes.
Okay.
Then there is issues of CRB, which I demystified last time by saying that CRB is not a death sentence.
And it's not always about the negative history.
It's not about the negative history. There is the positive one, and which is now being the ones that we are actually magnifying, the positive one, because there then we are able to tell where has this customer been, where has this borrower been, and how have they been, how are other lenders assessing him. How do they view this borrower out of the interactions that I have had? There is issues of we would also seek in determining character the levels of what we call financial commitments. So these we will get even from bank statements. We'd want to see through your account what other obligations are you servicing. You find that there are people who are paying credit cards. It shows that somebody who also has been tested elsewhere. But there are negative aspects of, bounced checks. Would want to say it means there is a promise you gave that you did not fulfill, or the customer did not fulfill that rather. It would also be looking at aspects of what other things are being, or what other obligations is the borrower servicing through their account. And that's why we like to see people with bank statements.
To cut you short,
yes.
Does it mean if, let me ask you, like for me, I haven't had borrowing to do, but and there is this other guy who has a lot of facilities that they're servicing. Who do you consider? Is it the person who you already has history, or the one who has none?
I told you last time, those who have never borrowed, we actually shy away from them because they are not tested, and we would not want to advance them money, or lenders will not be willing to give money to people who have never had a loan before. So it requires a person who has had that experience in the past is actually more preferred, because they understand how to handle funds.
But they're having a lot on their table, so to speak.
We'll be coming to that. So we look at many things, including there are many things that we are also trying to determine our character. There are issues of you find issues to do with betting. You find there are some transactions that are going through the account. Gambling and what have you. That helps you discover that this person is a risk taker. Once they have money, they get a lot of ideas.
But gamblers are not risk takers, are they?
They are, because they take on chances. Gambling is about taking chances. And really, when you're lending money, you don't want somebody taking chances. You want them to make well-calculated moves. Many a times, those who do even those betting, you will be told that less than 20% of them win. Yes.
But beginning a new business too is kind of risk taking. Is it?
It is
not gambling in so to speak terms.
Not quite.
You're gambling with their money.
No. This one,
it's an investment.
Is an investment. It's like I've said, it's well researched. One is not putting money in quick go, schemes. It is a calculated move. You're doing something that you're familiar with. Probably you have researched, and you've seen that when you put your own little investment there, it pays back. So many times, business, I think it's two worlds apart from gambling.
Now from Campari we have A is ability to pay.
Yes, A is ability to pay.
How do you determine the borrower's ability to pay back the facility, the loan facility that you've advanced?
Exactly. Ability to pay is important. Now that's when now the discussion on if this particular borrower has had a lot or is running with a lot of obligation presently. Now the question is, the funds is asking is an additional obligation. Will they be able to meet that obligation? So issues of ability to pay looks at cash flows. Our interest is actually on the borrower's cash flows. We are talking about with the entrepreneurs out here who have started their businesses and they would want to be funded. So we want to say ours is a lender's concern will be how do you generate your cash flows? The how, the when, and the how and the when of the cash flows. That one is important in determining the kind of facility that the borrower, the lender will be giving you. We would like to check also the kind of business that you are in. Is it a business where you have debtors and creditors, where you sell on credit, or where you can buy also on credit? If that is there, and we also look at it in terms of determining your ability to pay, you can find that there is a borrower who wants to be advanced a facility to back it with a debt that is maturing somewhere, that a debtor is going to pay them. Their customer is going to pay them. So such is also one way of matching or identifying the customer's ability to pay. Nature of their incomes, again, is also critical. Is it steady? Or is it seasonal? Is it speculative? It is important because, like I said, many borrowers out here give facilities that have a regular repayment frequency. It could be monthly, could be weekly, could be quarterly. And the lender should be able to, with a certain degree of certainty, be able to pick out that, and therefore be able to align the facility based on the flows that the revenue flows that the customer or the entrepreneur has. Yes. So that is the aspect of about ability. Yes.
Now, next, it's margin in Campari. Margin. What is margin? The margin of what?
Margin really is just the difference that margin can be equated to profitability. if it is a profit or if it's a price, there usually is a margin. What are you going to make out of a deal? And so the word margin here stands for that. A lender would be interested to consider a deal where there is some level of return. Like I told you, even as the exposures or the request for funding increase from borrowers, and borrowers get tested in the system, and now they are known, and what happens is after that they become very good at haggling or bargaining. So the bank will find itself, or the lender will find themselves having to discuss with this borrower, then how much is the lender going to make out of this deal? So that is also a consideration. Again, it is also important for the lender to be asking is every lending deal has an element of risk. You can never underwrite the risk to zero. What happens is we reduce the risk to an acceptable level. So the question is the risk acceptable within our parameters or within our appetite? We call it our risk appetite. So we are able to say if it fits within our appetite, then we can consume it.
If it's not?
If it is not, then it will not be thrown away. And most likely it will not be thrown away. But other things coming, what other precautions then will you take to ensure that the margins are safeguarded? It will also be good for the borrower, on the side of the borrower also, to understand by getting these money is what we call the cost of credit or the cost of borrowing. Is it a deal, even the borrowing that the borrower is getting, is it going to help them or is going to negatively affect their business? So the aspect of margin is very, very important.
Very important. Now, let's move really quick because of time. Let's move to P. Purpose.
Purpose is key. Like I said also last time, purpose here stands on issues to do with the borrowing need. What is the money being requested for? Because that one determines many other things. If the requirement is to fund working capital, issues to do with injecting cash flow into the business, one would want to, the lender would want to understand that very well. And therefore, even issues to do with the repayment will be linked on when those monies are coming. If it is an asset acquisition, it's also a purpose. We will be wanting to know or intending to know if it is being sold for X, and you are asking for Y amount, which Y is less than the X, is not equivalent to X, then how are you going to top up the difference? Because if we give you less, then you will not manage to get the asset. If we give you more, it means you will acquire the assets and then divert the money. Ensure that is done. So that is the aspect of purpose.
And what you're going to use this credit facility for.
Yes. And we advise entrepreneurs avoid causes that or reasons for borrowing that are speculative in nature. When they are speculative, be very open and sincere with the lender, because what happens then, we try to look for controls. How do we ensure that then your speculation is actually feasible, in that we can also rhyme ourselves and see that there is some also level of confidence in that this speculative activity can pay. But we highly advise to avoid such deals that are speculative. Yes. Yes.
Real quick to A, amount. How do you arrive at the decision of the loan amount? How do you, I mean, after all this, after looking at the character and all that, and then how do you arrive at the amount? Because I might come to your office and say I need 500,000, but then you look at me, you say you're not worthy 500, you're worthy 200, or you're worthy 100. I mean, how do you really equate this?
All right, we don't look at you and say that this is what you are worth. But really, like we've said, Money Matters like to look at how the experience one has had with money. Our intention is not to give or to advance funds to borrowers, which funds end up killing their businesses or, and making them really grounded in their inability to repay that money. So we look at the load. Amount here is just looking at the load. Is this a load that you can carry? Or are you too overambitious, because many choose to be overambitious. So we tell them it's good, but can you just scatter your need, stagger your need, so that you carry a manageable load now, and then you can go to. So that's what we talk about, even graduation. You will hear, like I said last time, we like to walk a journey with borrowers through relationship management, where we work with them, borrowing this amount of money. Start with this amount of money. You have an experience with it, repay it back, come for an additional amount. Now we'll give you a higher amount than the original one, like that. Yeah. When the borrower has actually learned how to even the pressures of paying a facility, they are building what we are now calling the credit history, which is very important. Yes.
Now, the repayment and insurance, I'd like us to just put this in together so that we really try to cover the Campari rule. Yes. The repayment and insurance.
And insurance. Yes. The R is repayment, the I, the last I is insurance. Repayment is issues of the frequency. Like I said, it will match the cash flows of the business or the borrowing need. If it is an LPO, for instance, many lenders would like to fund and time the payment of the debt with the payment of the LPO. Or if it is like I said, I gave an example of a school last time. If a school and the school fees being collected and the facility being advanced, let's say it's a school bus being bought by a school, would like to match the collection of school fees with when the loan will be due in terms of the repayment. So the R is about how to match the loan installment with when the cash flows come in. And finally, I is insurance, or collateral, which is collateral. And I also mentioned last time that we also like to talk about insurance as passing out the risk. You pass the risk to a third party. Now we also insure our facilities and ensure that should the borrower after having borrowed, if probably they pass on, we will not require that money from their next of kin and what have you. So we ensure that is insured. We also have collateral so that we will not have to go looking for third parties. And the collateral now liquidates the debt. Now, so that is the essence of the I.
Now, how can I navigate me as a borrower? How can I navigate lack of all these? I don't have collateral.
The aspect of collateral is important. Like I said, many borrowers do not know how to go about it. But lack of collateral doesn't mean one cannot borrow. Many funders out here, including Smith, where I work, and where we handle these matters, we start our borrowers from little amounts. And that way, they will not require collateral. We usually take very loose collaterals like household items. Of course, everybody has household items.
Radio,
such little things. And we are able to advance you money. Then you repay back. You see what it does to your business. We advance you additional amount. To the point where we are able now to tell you, I think you have come of age. We can actually fund you to acquire an asset for the business, which asset now in future becomes a collateral for the for your borrowing. And many have grown to that level, having started without collateral to points where now they have their own collaterals. So I would advise would-be borrowers out there, don't shun, particularly as who are in the microfinance sector. We embrace all, with or without collateral. But we must work with you in the journey if you're willing to just work with us. Yes.
Last time you talked about relationship, which is also very important.
Yes.
You have to create that relationship first with the lender.
Yes.
Even if you don't have collateral, just begin small. Build it.
Excellent.
Exactly. And then from there now you can take it higher. Yes. Now, what are some of the factors that you consider? Or you were saying something before I cut you short?
No, it's okay. The relationship is key, like I said, even as you're quoting, in that the ability of a borrower to be very sincere and open with the lender in the journey of credit seeking is important. That way we are able to understand the borrower. We also have a lot of, you see, we are holding the cards that one will require when they want to borrow. We are able to tell you this is what will be required, this is what will be required, get this and get that. We work with the borrower through a relationship to ensure, number one, we understand what business they are doing. Do they have the skills they need? How are their references say? We also do background checks on borrowers, and would want to find out suppliers. What are your suppliers saying about you? Do you borrow and never pay? In a relationship, we want to come and visit you at your residence to see how do you live. There are some places we work and find just at the point when we are coming to do our appraisal, another lender is coming to auction, is picking household items. So we get to know this person is not a good, this is not a person can be probably trusted with the issues to do with more credit.
I know there are other factors that you consider. I know that marital status is also very necessary. Just in 30 seconds or so, how important is that?
It is very important.
Why?
It's just about responsibility. Those who are married are being considered to be more responsible
than the bachelors.
Definitely, yes.
Because they are deemed to have people.
This person pays school fees, they pay rent, they take care of other dependents. They are not living for themselves. They are actually living for others. And lending, when you get business money for your business, you will also be doing it for others. So you are a good steward. Yes, that's how we view it.
Then I think most people out there who are single like me, we need to hurry up and get somebody, because that way we'll be considered as more capable to repay a loan facility if we took one. Now, just in conclusion, the last word that you can give to an entrepreneur on credit advancement from SMEP.
Thank you, Vincent, for giving us the opportunity to just come in here and demystify a lot of these things that are surrounding borrowing. And at SMEP, we have the facilities that any startup would require. We are just willing to walk the journey with those who are starting out on business. We have, like I said, we have facilities from working capital facilities. We have loans for asset acquisition, asset finance, plot purchase. We have partnerships with institutions where borrowers can actually acquire plots easily. We have insurance premium financing. One has a vehicle and they do not have the monies for paying an insurance. We have those kind of solutions. We have we can fund borrowers to actually increase their sales. Should that need arise also.
I know there's a lot that you do at SMEP, and of course we are not done with you, because next week also we'll be having you, so we'll have time to talk more about loans, the credit and all that, as far as that is concerned, and as far as SMEP Microfinance Bank is concerned. So I'd just say thank you for being with us today. As always, time is not on our side. I think we need more time. But I conclude always giving you a quote, and today I'm giving you a quote from Branson, this Richard Branson, the owner of Virgin Atlantic Airlines. He says that business opportunities are like buses. There is always another one coming. So if you missed one, be sure of the next one. My name is Vincent Kerosi. This is Kazi. See you next week.